How's it going, guys? My name is Jared Ace, and welcome back to MoneyMet Ace. Last week, we went through the MoneyMet Ace tax-free savings account on Easy Equities, and I found it a really helpful exercise, and it sparked a few changes in how I look at our portfolio. So this week, we'll be having a look at the ZAR account and going through each of the holdings that we have in the account and why we hold them. Before we start, though, I'm sure you've noticed that we've been changing the location quite frequently, and it has had an effect both on the video and audio quality, and that's because we're working on sorting out our home studio to film in, and it's taking a little bit longer than we thought it would. But hopefully it should be ready within the next few weeks, so please bear with us just a little bit longer, and thank you for understanding. Please remember that my videos are for edutainment purposes only, as I am not a financial advisor, this is not financial advice, and this is a blank wall. Blank walls. Put your logo on my wall. For more information about blank walls and their cousins, blank cups, contact us via email at moneymetace@gmail.com. Please also hit those like and subscribe buttons to help the channel grow. Now that that's all out the way, let's have a look at the account. Our ZAR account has a total value of 11,789 Rand and represents around 14% of the total MoneyMet Ace Easy Equities portfolio. It's currently up 43.5%, and that is due largely to the huge gains from our largest holding in the account. Let's see what that holding and the rest of the account looks like from the largest to the smallest holdings. The largest holding in the ZAR account is also the largest single stock we own, and that is Purple Group, with the company weighing a massive 41.9% of the ZAR account and 5.6% of the total MoneyMet Ace Easy Equities portfolio, and it currently has a value of 4,940 Rand, with our investment of 2,188 Rand having grown by 125%. Purple Group really doesn't need any introduction, but they are a financial services company which operates in the trading, investing, and asset management space. The company is best known for its 70% ownership of the wildly popular retail investing platform and investment democratizer, Easy Equities. Purple Group currently has its primary operations based in South Africa, but has expanded into Australia and will launch in Kenya within this year, as well as a planned expansion into the Philippines in the future. The company's primary source of income comes from the fees it charges per transaction on its various platforms, be that Easy Equities, GT247, Easy Crypto, or Easy Properties, as well as management fees for services rendered through the company's Emperor Asset Management and Rise Investment Service businesses. There is a massive amount of excitement around Purple Group, and this largely stems from the legion of fans that have found not only a platform that is easy to use and to invest on, but has also sparked opportunities for hundreds of individual investors to spawn their own businesses out of. The platform has brought about a revolution in the South African financial media and landscape, and many of the users of the app are investors in the company as well, ourselves included. The platform continues to sign up roughly 60,000 new accounts every single month, but the growth of this company lies beyond our borders. Easy Equities Australia has had an extremely difficult time getting off the ground, but it should be able to operate better this year with the easing of COVID restrictions. Aside from Australia, which only has a population of 25 million people and a high amount of competition, the countries that excite me the most are the expansion further into Africa and Asia, with the expansion into Kenya with a population of 54 million and the Philippines with a population of 105 million people, many of whom, like Mrs. Met Ace and I, are migrant workers who routinely send remittance money back home. Both of these markets have very little competition, and I think Easy Equities will spread with the same vigor and enthusiasm as it has in South Africa. Purple Group has been our standout performer across the entire portfolio over the last year, and despite being down 17% year to date, the company fared the best over the last few months' volatility as our US-based tech and innovation companies took a serious beating. Charles Savage, the Purple Group's CEO, has stated that the app will have UK and EU listed companies available for trading by the end of April, and that the second version of Easy Cryptos will be released in the next few weeks. He also mentioned that they would have international properties listed on Easy Properties, which I find extremely exciting, by the end of the year, with 2 or 3 international properties in line. Now, there's been no mention of this, and this is just pure pipe dream wishful thinking, but I really hope Easy Properties partners with Orbvest. To me, it seems like a really easy way for both companies to benefit. It really just makes sense. But, I mean, these are all pipe dreams. Charles, please, speak to Orbvest. The second largest holding in both the ZAR account and our portfolio in total is ShopRite, with the company making up 23.8% of the ZAR account and 3.2% of the total MoneyMed-H portfolio. ShopRite is a fast-moving consumer goods juggernaut with over 20 brands spread across over 2,900 stores across 11 countries in Africa, employing over 149,000 people, making ShopRite the largest private employer in South Africa. Their retail brands span all LSM levels as the company aims to build out an ecosystem of stores and support services, including e-commerce, brand partnerships, and added value services that enhance the value added to their customers. The company operates in 11 African countries after exiting Nigeria last year and Madagascar earlier this year. Although the core of the company's business is focused in South Africa, with 79.5% of group revenue coming from the South African retail businesses. ShopRite uses their vast network of stores and distribution centers to source products at preferable rates from suppliers, as they're able to make massive orders and benefit from huge economies of scale. The company makes a profit in the difference between the inventory and sales prices. However, a large portion of this difference is absorbed by the company, effectively giving the company the ability to shield consumers from a certain degree of inflationary pressure, while also allowing the company to charge really low prices, which is what they are known for. Simply, the more sales the company makes, the more money they make. ShopRite is, in my opinion, one of the most innovative companies listed on the JSE, and they have launched a number of highly successful initiatives in the last 18 months, which have taken the market by storm. Checkers 6060 has scaled rapidly and benefited massively from the first mover advantage during the COVID lockdowns, leaving the competition in the dust and scrambling to bring their own online and on-demand services to market. ShopRite's rewards and loyalty program, ShopRite Extra Savings, has over 23 million registered users. Not only do these members get access to deals and savings in store, but they also have access to a free money market bank account and free funeral benefit. If each member takes up the offer and uses their money market bank account, that would basically make ShopRite the largest bank by number of users in South Africa, by a long, long way. The company launched its innovation hub, ShopRite X, in August last year to act as an incubator for all the company's various innovative projects, as well as digitize and utilize data science collected from the massive consumer base to help better serve their customers. ShopRite has arguably been overvalued for as long as we've been investing and is very seldom cheap, with an average PE of 21.35. It currently has a PE of 24, so higher than the average over the last 5 years. It is priced to perfection, but it has, so far, been delivering perfection, and some. Our holding in the company is valued at 2,808 Rand, and That is an unrealized profit of 1,116 Rand and 77 cents, or a 66% gain from the 1,690 Rand that we had invested in the company so far. We will be looking to add to both Shoprite and Purple Group at any opportunity we get where we see there is a little bit of a dip or a depression in the price. We will be there like bears. Now on to the third largest holding, Affine Investments Limited. Our 1,250 Rand investment in Affine makes up 12% of our ZAR account and 1.7% of the total portfolio weighting, making it our sixth largest single stock holding overall. The company listed late last year and actually hasn't released their first financial statements since becoming a listed entity, but they should release their financials in the next few months. The company is a REIT, or Real Estate Investment Trust, which specializes and focuses on petrol filling stations. They currently own 7 sites across 4 provinces, and all of the properties are rented out to one of 2 tenants, either Sasol or Engen. The company makes the bulk of their income from rental agreements with the 2 oil majors, and earns additional income from rental of retail, restaurant, or auxiliary space available at the sites. The company was listed in order to raise capital to be able to expand the number of sites it owns, and that's where the growth in the future will come from. They've only been listed for less than 6 months, and there's no talk of any new sites yet, so I'm perfectly happy and comfortable simply holding onto this stock and collecting the dividends. When we first bought Affine, it actually wasn't listed on Easy Equities, and I had to contact the trade desk directly to make the initial purchase. Since then, the share has risen 20%, and our holding is currently valued at 1,510 Rand. SPAR is our 4th largest holding in the ZAR account with a value of 1,382 Rand. It weighs 11.6% of the ZAR account and 1.5% of the total portfolio, which is level with 3 or 4 other stocks, so it's kind of tied for 7th place in terms of the largest holdings in our portfolio. SPAR is a wholesale and distribution business which partners with independent retailers to use the SPAR branding and infrastructure. We did a whole video on SPAR a few weeks ago, which you can see over here. The company operates in South Africa, Ireland, Switzerland, and Poland, and they make their money by distributing wholesale products to their network of independent retailers, and so brand loyalty is really extremely important to them. The company was showing some signs of life after they announced that they'll be splitting their dividend in half so that they could redirect those funds to the Poland business and get it up and running better, but that rally was short-lived, and the company has been getting beaten down by the market since the Russian invasion of Ukraine, despite the company not having any operations in either country. Our holding is currently down just under 13%, and I think this current dip in the share price is kind of unwarranted, and at the moment it looks as if we're closer to the signing of a peace treaty than we are the war spilling over into neighboring Poland. So even though I was looking to sell out of the holding a few weeks ago, this might be a nice chance to lower our average purchase price and get out of the stock in a few months' time. And finally, the final and smallest holding in the account is one that I don't really pay much attention to. That is the 1,500 Rand I invested in the EC10 crypto bundle, which is a bundle of the 10 largest crypto tokens by market cap. I just bought it to add a little bit of diversity. It's not an area I've put any effort into. I put 1,500 Rand in, and it's currently down 27% and is valued at 1,024 Rand. I had a target of 2% of the total portfolio being in crypto in general, and so I'm currently underweight crypto in the portfolio since it only makes up about 1%. So I will be adding some more in the next few months, but only after we've maxed out our tax-free savings accounts, and this is really not a space, like I said, that I've put any effort into or really have that much interest in. Something I have noticed though about this account and the US account that isn't present in the tax-free savings account is that these accounts, even though I aim to have a longer term outlook with everything that I've bought and I've always had the idea of being a long-term investor, that's not always the case, and I've found myself looking at holdings like EC10 or even SPAR, and I see them more as cash that I could use to invest towards other investments like ShopRite or Purple Group. Conversely, I've never looked at my ShopRite or Purple Group holdings and thought, I could really take some of this money and put it in something else, say Transaction Capital, for example. I want to own as much of these companies as possible, and have found myself actually having a more focused and concentrated portfolio in these accounts than I had initially intended, as there's some companies which I simply want to own as much as I can as possible, and others that I just don't. Diversification can be a controversial topic. The way that I currently see it, diversification is not the goal for us in this account. We get enough diversification from our tax-free savings account. This account is meant to be the driver of market-beating returns. In a few months' time, once we've maxed out our tax-free savings accounts, we will be looking to keep this account and the US account limited to 5 or 6 high conviction companies each. So that's the MoneyMatAce Easy Equities ZAR account. Thank you for watching. If you liked this video, please hit that like button and share this video with a friend or a family member. Also, please consider subscribing to the channel and ringing the bell to be notified when we upload new videos. You can also follow MoneyMatAce on Twitter and Instagram and everywhere where MoneyMatAces are. Happy investing, and I'll see you next week.